As we always discuss on this show, the Federal Reserve certainly has all markets on a string. Never been so true right now, especially when it comes to the bond market. The stock market and the power of round numbers and magnets that are pulling to all-time highs. Bitcoin, to quote Larry David, looks like it's doing pretty good. But what's up with it, other than the price? And mortgages and interest rates, as everybody tries to play Copernicus and predicting that rates are going to go down, why haven't they come down yet? My guess is because they don't need to. Welcome back to This Week in Mortgage, everyone. I'm Sam Battaglia at Mortgage Black in Beverly Hills. I hope you had a good week. All right, the Federal Reserve has these markets on a string, especially the bond market. Now, here's my thought. I don't think the Federal Reserve is so concerned with the stock market. Stock market, small percentage of the overall consumer base is participating in the market, so they might just believe that it's not going to contribute to their number one hawkish thing, which is inflation. Bond market, on the other hand, instantly, at any change of posture by the Federal Reserve or hint of a change of posture, bakes in what they think the Federal Reserve is going to do. So when the Federal Reserve actually raises or cuts interest rates, it's already baked in and the bond market's moved on looking for the next set of indications from the Federal Reserve. It's old news by the time it happens. And the proof of this is that about a month and a half ago, everybody thought the Federal Reserve was going to cut 6 times this year. So 10-year Treasury yields went from nearly 5 to about 3.75. And magically, when the Federal Reserve said there might only be 3 cuts this year, the bond market instantly baked it back in and sent yields back up to about the 420 level, which we've been sitting at for better part of 3 weeks now. So I guess my point is, by the time the Federal Reserve actually does something, the bond market's already anticipated it, already baked it into the cake. That said, there is a Federal Reserve meeting this month. It's a big one. We will see what they do. Moving on to the stock market and this magnet to round numbers. A few weeks back, we mentioned I thought there was a magnet pulling the Dow to 40K. It's not there yet, but it's getting close. NASDAQ's magnet was at 16,000. It certainly broke through that. And the S&P's magnet that I talked about was 5,000. It certainly broke through that. Here's the thing about the stock markets in general. The heavy balance of the wealth has mainly been in these stocks they like to call the Magnificent Seven and a few others. So you as a consumer, if you're not participating in these names, you're not really feeling this wealth effect. I think the Federal Reserve might actually watch this and not really care what the stock market's doing because they know that the amount of participation in these few names isn't high and heavy, so it's not really going to move the needle on anything that they're looking at, which of course, as we know, their number one thing is inflation. Moving on to Bitcoin, it's done pretty well. Few questions that no one can still answer for me with definition beyond what I've heard. Number one, what is it? Number two, what can you buy with it? And number three, why does it even matter? I do understand that Bitcoin is an algorithm based on confidence, but what really is it? Maybe at the end of the day, before today's modern time, and I'll get to that, Bitcoin was an alternative to people. It could be a sign of people bucking the status quo and the norm, and maybe it was a rebellion play at one time. But now, Bitcoin's back above 60,000. It's at or near an all-time high, and it certainly didn't hurt the price action on Bitcoin that the major institutions that initially shunned it and basically called it a toy and made fun of it have now heavily adopted it through trading vehicles that they have either participated in or actually come up with themselves. So Bitcoin is just one of those things where you plant a seed and it grows, and it looked like it grew to the point where people couldn't ignore it anymore and are now using it for a new source of found wealth. And that's pretty interesting that it actually doesn't exist, because what is it? What can you buy with it? And why does it matter? I guess the answer is only matters because people have their attention towards it. Moving on to mortgages in general and interest rates. The Fed does have things on a string, as I keep saying. But let's discuss for a moment the reason rates go up or down. The reason rates go up is because the economy's overheating, inflation's overheating, the Federal Reserve has to raise rates. The reason rates go down is because the economy's stalled out, some recession or depression is perceived to be happening, or we're in one for that matter. Point is, it's the raising and lowering of rates is the first tool the Federal Reserve has in their bag. And despite the 500 and some odd basis points the Federal Reserve's raised in a short amount of time, the economy has not broken. It has not crashed. Stock market's at all-time highs. The housing market is there. It's very boring in my opinion, but it does exist. And the economy survived. So, I tend to laugh now when I hear people making predictions of when interest rates are going to fall, given that mortgage rates, which pretty much follow the 10-year Treasury in most cases, have things baked into the cake months or maybe even a year in advance sometimes. Rates don't need to come down. So everybody that keeps saying rates are going to come down this summer, I would like you to tell me why you say that, because the Federal Reserve, they might cut rates, but it's already baked into the cake. A few months ago, everybody thought the Fed was going to cut 6 times at 25 basis points a whack, and we got the 10-year Treasury down from 5% to 3.75 yield. Then when the Federal Reserve signaled they would only cut 3 times this year, this is all speculation of course, 10-year Treasury instantly reacted, went from 3.75 to a 4.20 and change yield, which we've been sitting at for the better part of 3 weeks now. So when it comes to people and their predictions of interest rates, anybody's guess is as good as anybody else's, but a lot of times I think it's based on nothing. Okay, everybody, that is my show for this week. I hope you enjoyed it. Once again, it's the weekend. Please be a nice person, be a good neighbor, follow the golden rule, do unto others. As always, thank you so much for your time, and enjoy yourself.